Hello, traders. Dale Pinker to TradeGATEHub.com, and we're powered by TradeView Markets. TradeView, you can trade hundreds of instruments, including CFDs, crypto, across the board, with really competitive spreads compared to your broker. Check it out on our page here. I just want to start off here with what's happening at the US dollar yen. I talked about a low at 130, which we had divergence in them. It was key what happened here yesterday, carving out a higher low and then cracking this 50 on the 4-hour TF. And Monday I was talking about that we could see a move towards 134. That still looks very viable to me. And in fact, I think there's more in it after that as well. In fact, I could make a case for us seeing the 140 handle again. I'm not sure if it's going to be because of a stock market melt up or because of a dollar rally that's coming. So I wanted to keep this US dollar yen chart in mind as I go to the DXY, which you guys know I bought under 102. Yesterday, last week, we had a very much deeper pullback, and here's the battleground in the DXY. You don't want to see closes under 102. Under 102 is going to open the door for a washout. I think all the way to the big round number of par, 100. But should we hold here, just like the yen did, we could get this advance that I think is going to take us above the 105.5 level. So key battleground area at 102. Decent risk reward. So you get long at 102.30 right around here. And you can have sell stops with some tolerance under recent lows and maybe even think about reversing should that happen. I'll talk about stop and reverse down the road, but sometimes you get to levels where you not only want to take profits on the direction the market is heading, but it's such an important area that, say you were long one, you sell two, which leaves you net short, net short one. Or you're short two and you're short one and you buy two, and that leaves you net long. So this may be the kind of situation you want to have be long and reverse out on a failure. Looking at Aussie, it continues to lag pretty dramatically. I mean, compared to cable, was actually able to take out last week's high. There was no head and shoulders, but we are diverging up here at 3.5. I know a lot of people think we're going to have to take out the stops over the 124.50 level up here, this little double top, and clean out the last of the bears before we get a pullback towards 118. So whether we're peaking right here or it takes one more stab, I do think that we can test 118 again, which is going to be very important. Because if cable doesn't hold 118 on the downside, you just arithmetically from 118 to 4.5 gives you 111, 112, 61.8 back of this entire move up. So you have to be aware of what's going on there. Silver tried to make a new high yesterday. So far, it's a failing rally. I have to say it's traded better than I thought it would, begrudgingly. It gives up some, intraday gains and then gets them back. But I'm playing this as a rising wedge with divergence. And your first sign that we're doing something wrong would be to start taking out the 22.90, 22.80 level. And then after that, we could extend to 21.5. And a bullish yen should play into that. I mean, if we're going sharply higher in the yen, we should get a pretty decent, at least, correction on the downside in gold and silver. Again, I want you to keep in mind this very important trend line in gold, because that's definitely going to kick off the correction. That's a breakout line that we have going back to the old high. Show this here. All right, off this high. And then the 1960 high. And it's that you have to respect it because it's been tested. It was tested, you see it pretty clearly. Look at this long-term line. And here's where we had a test of it. And we tried to rally to new highs. We couldn't. So back underneath this line, call it 1933, 34, there's going to open up another $50 decline in gold. And then 1880, there is a chance that we could go back to 1800, which Ellioticians would express as wave 4 of lesser degree. So that's a rundown. Yen on track. That should drive yields higher. That should create a correction in the gold market. And, you know, when I look at this 10-year yield, I was talking about that we'd see 375. That looks underway. But, you know, I took a look at it daily. And after 370, there are accounts that take it to 3. But over 370, it's going to look pretty good to go back and challenge the highs, which is what no one's expecting right now. Everyone's expecting, because of what happened at SVB, that may have been the last hike by Bernanke. And it's very possible that, especially if the market is stable and, you know, S&Ps are acting like they want to melt up. A lot of people looking to get short at 41, 4,200. So that would definitely could happen in a rising yen and US dollar yen environment and yields going up. So here's your TLT. I know some people that I respect are looking to buy this break in TLT around 103. We're only a handle and a half away and looking for a breakout to the upside. So a dollar rally and a breakout to the upside in bonds would probably spell the end of this this wave up in optimism in the S&Ps towards maybe 4,100, 4,200. Maybe they could keep squeezing people. Maybe I'm all wet, and guys that are talking about a melt up, that's underway as well. You know what you have to do when you're a trader? Keep an open mind. It'll keep your account open, and be open to both sides, both narratives, and consider them in your position and see which narrative is playing out more on a daily basis. The one that you believe in and your bias is, or the other side of the trade. So that's a little coaching advice. I hope everyone has a great trading day. Mike will be with you in about an hour and a half. And tomorrow I have my interview with an anonymous trader who has close to 400,000 followers on Twitter. I went through his stream. We're going to hear from an expert trader tomorrow. Tune in, same time, same station. Good hunting, and don't just count your pips.